Good evening, this is Business Insight, and tonight we're looking at the cooperative movement, its achievements and its challenges in executing its core business or operations. Joining me in studio is a CEO of the Cooperative Alliance of Kenya, that is Mr. Daniel Marube. On the far end is the Commissioner for Cooperative Development, Madam Mary Mungai. Welcome. And tonight we're also asking you, the ones who's watching us back at home, are the current penalties for employers on non-remittance effective? Do you find them effective? You can reach us on Twitter at Ray Manyara or at KBC Channel 1 on Twitter. The SMS line is there on your screen at 22162 and join in the conversation. Now to the main issue. For the last 2 weeks, the cooperative movement has been very vocal in saying that the proposed amendments to the corporate movement, the miscellaneous amendment bills for 2018, they're draconian, they're not inclusive, and they're going to affect how business is conducted by the cooperatives. Now let us look at the sections of Section 2 and Section 17 that talk of the creation of a new class of members. How will, first of all, this new class of members, when you say special impact members, who are they and how will they affect membership at large? Let's start from there, Mr. Marube.
Yeah, thank you very much. In the definition of who the cooperative is and members, we do not have words like special. All members who join a cooperative society with a common reason or purpose, they have equal rights. We have, it's a democratically run organization by the members and autonomous, owned by the members themselves. So for you to join a cooperative society, you have to write to apply, contribute either shares or buy shares, or have your monthly or annual subscription to the cooperative society. And within the cooperative society, we have rules. These rules will state what a member is, how to join, your rights as a member, and your obligation. One of the obligation is, we call those rules bylaws. Those bylaws will guide on how our activities in the cooperative society will be. It does not create classes of people. We come in and each person has one vote.
So there is no special in its current form without the proposed amendments.
Yes.
Everyone is equal regardless of the number of shares.
Thank you.
Madam Mungai, from where you sit from a regulator point of view, this creation of special impact members, from where you sit, how is it going to change the dynamics, especially where membership, rights and autonomy is concerned?
Thank you very much. I think first and foremost is to understand that cooperatives is run through a legal framework called Cooperative Societies Act. And the mandate of the commissioner is for growth and development of cooperatives. And what guides the formation of this unique business model under cooperative is what you've just said, the principles of cooperative. So by the proposal that we have a new definition of cooperative impact group in the cooperative, means that there will be an ordinary member and there will be a social impact member. That's already a classification. Whereas in cooperatives, all members are equal. It is an open and voluntary, because now again the social impact group says that they are not going to ascribe or to adhere to the bylaws that are already being adhered by that particular cooperative. So it looks like it's a new structure within an existing framework that is guided by the Cooperative Societies Act and the society's bylaws. So we're saying we'll have an ordinary member, we'll have a social impact member. So that in itself already violates the principles of cooperative. So by having that particular group and the proposals that I have proposed now in the SACCO Act, because the proposals in the definition comes in the Cooperative Societies Act, bringing a separate member of who does not even participate economically, which is one of the principles that if you're a member, economic participation is a must. You must vote. You must undergo training and you must have concern for the community. You must. So for the social impact, it looks like there's going to be a parallel structure from what the cooperative is, but they will be enjoying the cover of the cooperative society, the registered cooperative society. So that brings in an issue.
So it's a violation of what the cooperative
principles
stand
are. For. Yeah.
Mr. Marube, I can see you nodding while Madam Mungai is actually speaking.
Yes.
Well, now let's come back to the issue of the members' rights, the autonomy, and the membership itself. There's something Madam Mungai has said is that these special impact members will be within, yet acting without. Maybe you can elaborate on that.
Yes, the thinking here is that cooperative societies don't have sufficient capital for their growth, and that sometimes some cooperative societies could be waiting in a queue to be served. They don't get their loans instantly. And therefore, they are coming with a carrot saying, here we are, we have money, we have capital, we can bring in the money so that you can expand your business and you can give your members as much money as they want. And they are saying that in order for us to do that, we need you to address your members in an AGM to pass a simple resolution which will be approved by the minister. And we don't know which minister, whether it's the county government minister or the national government minister, to allow these social impact members who are not defined and who are not, whose names will not appear in our register, and who will not buy shares in our cooperative society, all contribute their monthly contributions, come in to an already existing cooperative society, and when they come in, they will create a fund.
Yeah, the special fund.
The special fund. And when they come in and create a special fund within our cooperative society, that particular fund they will also create an advisory board and an investment committee. These three committees will be independent of the existing committees. So here we are, you have invited these people into our house. They will form a corporate company within us. And the membership of these committees comes only from these special impact members, leaving out our members.
Other ordinary members who were previously members of the
remember, we already have management committees. So we are like having two management committees within the society. And they're saying, as they manage this fund, because it's their money, so they have to take interest of their funding.
So the special impact members are to come on board.
Yes.
Give money to the cooperatives.
Yes.
But manage, or rather decide on what investments that these SACCOs or cooperatives are going to do without the impact or input of other ordinary members.
Exactly.
What of the risks? Exposing the members to risks in terms of investment. We know investments, how will this affect investments?
I think one of the critical issues here is that members in a SACCO, we are talking about SACCOs, which are about 12,300 in Kenya, and 176 of those are what we call deposit-taking SACCOs that are licensed. So they're saying this special fund, after it's created by the social impact members. The ordinary member has no role in that.
Okay.
However, the normal member has come together to save and borrow. This is a social impact fund, impact member with a special fund. It means then the member does not have to save. There is a basket here with money, which they can borrow, and then after they borrow and pay the interest on the loan, it is only the social impact member who will benefit. The normal member will not. So in this in itself actually violates even the Constitution, because we say, I mean, in the Vision 2030, where we are talking about savings by Kenyans, saving mobilization. So it is people with a lot of money. The ordinary member, if there's money to get from across, he will get it. So we are saying it's also kind of creating a captive market for the social impact, denying the member the zeal to save and borrow and do the issues. So when the risks now come into play, if the member does not pay, it behoves the society to ensure it pays. And remember, the society, like my friend has said, the management committee is not actually not involved in the social impact lineage, because he has said they will create a fund, they will create an investment committee, they will create a trustee who is a company outside to come and manage the loan issuance. So what is the management committee doing there? It means then eventually the SACCO, as we know it today, will not exist.
The proponents of these amendments are arguing that the creation of these organs, the special fund, the investment committee, the special fund trustee, is going to ensure that liquidity issues that most SACCOs find themselves into are a thing of the past. But are you differing with that?
Yes.
Okay.
Yes. Let me tell you. What they are saying, they want to take advantage of our brand name that we have built for a very long time. They're saying, you rightfully said we have saved more about...
almost $1 trillion.
About $1 trillion shillings.
I said this.
And they're saying we will come in and the investment committee can borrow and do businesses out there without our consultation. But our deposits of the members, the capital that the members have built will be the collateral. It's a security. So that one risk, in the event that their businesses doesn't do well, our deposits is at risk. Number two, they're saying when they do very well, all our members, the members who borrow from this fund, it is the responsibility of the cooperative society to make sure that the collections have been made. And when the profits are made, we don't share at all. But remember, in our corporate, in the current situation, the way we are, when we make surpluses, we share amongst ourselves equally, depending on the number of shares you have. So the risk number three is that when they come in, they are going to take over. They are taking over our businesses. So we are saying, if for that reason we don't want them in our house.
No.
And I think I just want to add there, the idea might not be drastically wrong, but we are saying if there is a group that has money and want to create liquidity, we have openings. They can form an investment cooperative, which maybe then we work on modalities. In our cooperative policy, we have what we call Cooperative Development Fund. And in this Cooperative Development Fund, we foresee a situation where, what are they called, angel financing or credit that is very affordable, that we can create that kind of a pool, and cooperatives or SACCOs that have challenges in liquidity can borrow for various programs or even to fund. So we are saying the idea would have been good, but the way it was brought, because there was no consultation, then it's really the way it has come through that miscellaneous amendment, it's not good for the country.
Let's digress just a little bit. Tonight we were asking our audiences, like, what are the current penalties for employers who fail to remit their members' deductions effective? So we were asking this question, and I'm sure we're already getting feedback. But now let's look at the regulation point of view from where you sit. What action, first of all, how is this affecting SACCO operations? Maybe Marube, you can give us that. Then we look at the actions that you've taken.
Yeah, indeed, that's a very big challenge. We have organizations where their employees are members of a cooperative society, and they have given instructions to their employer that as soon as the end of the month, before you pay me, I want to develop a culture of savings. Please deduct 5,000 shillings from my pay and remit it to my cooperative society. But what we are seeing, quite a number of cooperative societies, organizations, both private and even parastatals, and even government organizations are doing, after deducting, they are not remitting. They are funding to do their own, they are funding their activities using people's funds. It's just like stealing from their employers, really, because you have paid me my salary and you are cutting part of it and you are using it. And we are saying it's illegal. It's morally illegal. And what we are doing together as CAK, Cooperative Alliance, together with the Office of the Commissioner, we are compiling the list of all these organizations who are not remitting their funds to their cooperative societies. We will be publishing them. and we will be taking them to court.
Now, short of publishing and taking them to court, Madam Mungai, we can agree that this is not something that has just begun happening. It has been happening for eons, over and over. What action have you taken from a regulator point of view? And if you have the statistics about actions that have been taken or what is provided for in the law, kindly share.
Okay. I think the SACCO model, especially for employer-based SACCOs, it really saved the employer. Because I remember in those early days, the issues of salary in advance, salary advance, and whatever, you know, the employer giving the employees money alone here and there are almost something of the past. The model was very good because the employer, like he has rightly said, the employee directs how much that should be going to the SACCO. However, that model has truly worked because as we saw from your statistics, we have in excess of 600 billion in savings, deposits from members. From the same SACCOs, we have seen like there's excess also of 590B that has been borrowed by members. So it's a good interplay. However, in the recent past, we have seen employers not remitting. And because of that, the law, the Cooperative Societies Law, Section 35, actually stipulates if an employer refuses or does not remit money in good time, they're supposed to undergo some penalties. And the penalty is normally 5% every month that for the money that has not been remitted. So that is there. And I can assure you that before this law was amended, the amount of money that was outstanding there was in excess, I think, of 800B. But now the recovery was done very well. The only thing that I want to ask the SACCO leaders is that please do not wait until the load or the non-remittance has grown to such a big figure, because we are seeing people coming to complain maybe 5 years down the line, 4 years down the line. If we compound that interest, the interest even becomes, I mean, the penalty becomes even much more than the principal. The actions that we take normally is that we ask the SACCO through the county. Please remember, again, this is a devolved function, and we work very closely with the counties for them to compile and fill the amount not remitted with the penalty that has accrued. After they bring to us, we write notification to the employer asking what is happening. Can you give an explanation? Because somebody could maybe have a lot of financial issues. If they fail to do that, then we appoint an agent, and normally these are banks. The only catch here is that it is the SACCO that has to bring the information to us to tell us if it's KBC, let me use that KBC banks with 1, 2, 3 when we appoint those ones as agents. So it behoves the SACCO to ensure that they provide that information. So after we write letters, the agency, the banks are supposed to immediately freeze whatever amount of money that is in the banks. And they talk to, I'll take an example, to KBC, and they say, this has been done, we have frozen your account, what do we do? Ideally, they're supposed to remit that money to the SACCO directly, but because of good relationship, they first do that. But eventually, we have given them a time frame, which they should write to us and tell us there is money, and we have done this, and after some time, they're supposed to remit to the SACCO. That has not been happening. So the next step, okay, for some banks, we have no problem. Actually, we have seen a lot of goodwill from some banks, but there are other banks that are not doing that. What we are now doing with the AG's office is getting court orders so that they can cover themselves, because there's also a relationship between them and their clients, and then they remit to the SACCO. But I can admit there's areas that we are slow because we get accounts. When we freeze those accounts, they have no money. So by the time they get another account, it takes time. So I know it's a slow process, and it is worrying us because we would want to ensure that the SACCO stays in business and not close, because chances are some of them are suffering, members are not being given their loans, they are not getting any dividends on their loans, so it becomes, I mean, interest on their deposits, so it's becoming a challenge.
So if you may allow me to just take a response here that we've gotten on SMS. Someone says, my deductions are made diligently each and every month, but I end up not getting dividends because my employer has not remitted my funds to my SACCO. Is that right?
It's criminal. We have said that's
Definitely,
a criminal
right.
activity.
And what about I think the question is withholding the dividends.
Unfortunately, the SACCO is not at fault. It is the employer that has brought this malfunction in the business model. And as he rightly says, it is not right, it is criminal, and we have even seen, we are going to revise this law to ensure that that becomes almost like an economic sabotage, because it is unfair. It is unfair to a member whose salary has been deducted and an employer is keeping that money and using it for other purposes other than what it was intended. Because for the member who was not a SACCO member, they get all their money. They get their full salary.
Now another question comes in, is the issue of, you've said that the SACCOs have to notify the regulator in form of writing about the non-remittance. What if, what action can a member, leave alone the leaders of the SACCOs, what action can they take? Because let's be very honest, we'll find we have complacency in some SACCOs, and some have become, that's the order of business. They cannot come forth because of vested interest here and there. But what can these members do to safeguard their savings?
We have seen where, sorry to say this, where top management is the same, they're the same in SACCO management, and that brings a conflict of interest. Because if it's a finance manager in a company and is the same chair, he will not be able to dissociate himself. We have seen models, and I'm not saying this is the perfect model, but we have seen models where the top leadership actually has left leadership of the SACCO to middle level group so that they are able to dissociate that. Here is where the challenge comes. When you are a leader in a cooperative society, really complacency is not an option. And that's where members, if they see their leaders are not performing, they have avenues in law to recall the leadership and appoint people who would be able to drive and to stand for their rights. So what I'm saying is that we have seen that issue, but that is why our office was created. Let me say, even if the functions of cooperative have been devolved, we have even seen challenges where the county itself is not remitting, so the officer in that particular office will not be able to say or to freeze an account of a county. So when they bring the matter to the head office, then we are able to do that without any interference. So what we are trying to say is that there is that conflict, but when you are a leader of a SACCO running financial services for members, poor members, they have an option of recalling the leadership or actually writing letters to us to complain so that we can ask the leadership on what grounds.
Yes. Marube, what's your take about this? I can see you nodding.
Yes, what I'm saying is that, first of all, we have agreed it's criminal. It's wrong for an organization to take the employees' money to do business. You can't fund your organization's business using your poor employees' salary. Number two, CAK, we have a desk, we have an officer now who can be contacted to help a cooperative society. If a member feels like there's a problem, we are ready to come and support them to fill those notifications and send them to the commissioner's office, and I will be there. I mean, we push them to make sure that this action is being taken, because the impact is very big. Some of the cooperative societies members have never been given loans for 6 months, and because the money is being held by the employer, who should be put in jail, because really what they are doing is criminal. It's sabotaging the economy of the poor people. So it's something very bad, and it's affecting us and our operations.
We're reminding you tonight, we're talking about the cooperative movement, and we're asking you tonight, do you think that the penalties that are meted out on organizations or other employers that fail to remit member funds is effective or punitive enough? Do continue sending in your SMSs to 22162 right there on your screen, or even you can reach me at Twitter at Ray Manyara or at KBC Channel 1 as we continue having this discussion. Now let's go back to the proposed amendments bill. 2 weeks ago, the cooperative movement came out fighting and saying that these amendments are not good, are not good for the cooperative movement, and we've already established that. And you were to write to the clerk of the National Assembly to have this recalled because there was no, it was not a consultative move. Now that you wrote to the clerk of the National Assembly 2 weeks down the line, have you had feedback?
Thank you. Let me say, number one, that Cooperative Alliance of Kenya, CAK, is the apex umbrella organization for the cooperative movement in Kenya. We draw our powers from Cap 490 of the Cooperative Societies Act, and we are created by the members to represent them and to do advocacy on various issues and representing them locally and internationally. And one of our core mandate is to participate in the process of a legal and policy framework that affects the operations of the cooperative societies in Kenya. We want to say that we were never approached. We did not participate in this. It came as a surprise to us. And therefore, we are saying this particular process, the manner in which it has been brought up, it's not good. It's not good at all. It does not meet any standards. Yeah.
Okay, now,
I think maybe on that, we made our submission, and I am sure when they have the sitting, they will call us. That is one of the public participation, and that's why they were asking for memorandums. So I think when the time is ripe, I'm sure we will be called and we'll present our position.
So in the worst case scenario, that this does not go the way you stakeholders want it to go, what next? We are looking here at an asset base of almost $1 trillion shillings, and the proponents are saying that the creation of these organs, the special impact, the special fund, the investment committee, all these are geared to ensuring that SACCOs have liquidity. So there's what they're seeing and there's what the other stakeholders are seeing. So what next in the event that this is actually taken up?
There are two things. Number one, yes, it is true, we have submitted our objection to the clerk as it was required. Number two, we have written also to request that if there be any discussion on this matter, we be included, that we can go and explain further our reasoning on, and give justification on why we are refusing this. Now, I have no doubt in my mind that this particular amendment will not see the day. The members of parliament will never allow this to happen, because the people in the rural areas, the very people who earn less than $1 a day are the same members who are society members. So I believe and I trust completely that our members, I have confidence in the members of parliament that they will never allow such a bad law to pass. Number two, in the event that it passes, that will be disaster in this country.
What do you mean disaster?
It will be a total sabotage. It's killing the membership. We have now over 15 million members. Assuming every member has one or two members of the family he supports, you can see that the cooperative movement is supporting more than 3/4 of the Kenyan population. You will kill the people, both economically and socially. Why would somebody want to kill the 3/4 of the Kenyan people?
Good question.
I am very optimistic.
I'm
very optimistic because even Parliament has a SACCO. We have champions that have been pushed to Parliament through cooperative movement, and they have cooperative issues at heart. They understand what cooperative is. So I have no doubt that we shall be called to present our views. This thing will be discussed, and I am sure, like my brother said, that bill will not go on. It will be sent back for involvement of these various stakeholders. I have no doubt about that.
So we've not already seen members trying to pull out their monies or their funds from various circles in jitters. Has it already sent jitters in the cooperative movement? Maybe Madam Mr. Marube, sorry.
You know, people are waiting. We are waiting to see the discussions. As I said, we are very optimistic that this is a bad law. It will not go through. And that too, as leaders, we have that kind of confidence, and soon you'll be seeing a lot of leaders meetings in various regions in the country, making noise about it, and everybody's hearing about it, because you know, if members run for their deposits in the SACCOs and cooperative societies, this country will never be the same again. It will never.
Now, because we are not calling on doom onto the cooperative movement. Yes. Now, let us look at the government has laid down a very ambitious plan, the Big Four plan. And if you look at the statistics between 2016 and 2017, actually 2016 is that the SACCO, those are the cooperative movements, dispensed over 70,000 loans. Their value, you're going to tell us. So it means that the cooperative movement has the financial muscle. How are you strategically placing yourself to actually participate in the Big Four agenda, Mr. Marube?
Let me take, for example, the health, universal health. You know, most of the loans that we give our members goes to fund medical bills in the country for our members in the hospitals, going to India, and so forth. And so what we wanted to do is we would like to participate in this agenda of universal health by becoming agents of NHIF, so that we can recruit all our members and their families to have an, what do we call it, the NHIF card, to be members. And number two, we know that some of our agriculture-based cooperatives, they get their money or bonuses once or twice a year. So we are encouraging our cooperative societies and membership, leadership, to pay for the members, the whatever required by NHIF, and then recover that from their members once their coffee, their rice, their maize, their produce
the
is
returns
paid.
come. Wow.
Yes, yes.
So the future is bright for the cooperative movement.
Oh, yes,
yes. And
parting shot, Madam Mungai.
Oh, parting shot.
Yes.
I haven't said it. The issue of cooperative involvement in housing is evident. We are big players. Our cooperative movement is a big player in housing. Like this year alone, cooperative without any government interventions was projecting to do 6,000 units. They have already done 2,000. The number is growing. So with government intervention and the government providing bulk infrastructure, which makes the cost of housing very difficult, they will, I'm sure they will play into that space. On the issue of SACCOs, they are big players, like you said, 600 billion deposits, over 600 billion deposits. They are also going to play in the Kenya Mortgage Refinance Company. They are going to play in the National Housing Fund. And cooperatives still have a lot of land that is not been made liquid. They are also going to get into an MOU with the National Housing Fund, and they will play that part. On agriculture, Githunguri is an example. The value addition, I think that is the way to go, and also to involve the youth. On the health, even IRA now has recognized the cooperative, and it has commissioned a study so that they can use them, the cooperatives, as SACCO, what you call SACCO assurance, as agents for insurance. Yes, so I think the future for cooperative is bright. Cooperatives can be in any sector of this economy, and they haven't exploited that, but we are sure the way it's going, cooperative is the way to go, because it's an all-inclusive kind of business model which carries especially the lower base of the pyramid onto the fold. Thank you.
Well, you've heard it from the stakeholders there. That is the Cooperative Commissioner of Development, that is Mary Mungai, and the CEO of the Cooperative Alliance of Kenya, Mr. Daniel Marube. Yes, the future is bright for the cooperative movement going forward, and stakeholders are optimistic that the proposed amendments to the SACCO law, or rather cooperative movement law, are not going to come to pass, because first of all, they'll be infringing on the very spirit that the cooperative movement was formed on.